Alright gang, it's your boy Nature, aka Nature. Alright, so we back with another video. Alright, so we just went over how to trade a bearish and bullish pennant. Alright, so the information is key. Information is everything. So once y'all got the information, you'll be able to turn up and make money in this market. Okay, so it's $66.6 trillion market. So you know you could become a millionaire in this market once you understand the information. That's what y'all paying me for. That's what I'm gonna give y'all. So let's just get right into it. So how to trade triangle chart patterns. Okay, so these are chart patterns that you're going to see in Forex. Just like you're going to see single Japanese candlestick patterns, you're going to see double stick candlestick patterns, triple candlestick patterns. You're also going to see different chart patterns. Okay, like the bullish and bearish penning. You're going to see the triangle chart patterns. Alright, so we're going to break down all the chart patterns and how to trade all the different type of chart patterns that you're going to see in the market. Alright, so like I said, I'm going to give y'all all the information, as much information as I can, so y'all can turn up and make money in this market. Alright, so gang, let's get started. So how to trade triangle chart patterns. So a triangle chart pattern involves price moving into a tighter and tighter range as time goes by, and provides a visual display of a battle between bulls and bears. The triangle patterns is generally categorized as continuation patterns, just like the pennants, meaning that after the pattern completes, it assumes the price will continue in that trend direction, and it was moving before it was moving. In that trend direction, it was moving before the pattern appeared, before that consolidation. The price will continue to move in that direction once that consolidation is over. So that's what basically a continuation pattern is. So a triangle pattern is generally considered to be forming when it includes at least 5 touches of support and resistance. And we're going to break that down for you. So for example, 3 touches of support line and 2 for the resistance line, or vice versa. So just like there are 3 little pigs, there are 3 types of triangle chart formations. Symmetric triangles, which is like the bullish and the pennant triangles. Then you have the ascendant triangles and the descending triangles. So the symmetric triangles is chart formation patterns where the slope of the price high and the slope of the price low converge together to point where it looks like a triangle. What happens during this formation is that the market is moving and making lower highs and higher lows. This means that neither the buyers nor sellers are pushing the price far enough to make a clear trend. If this were a battle between the buyers and the sellers, then this would be a draw. This is also the type of consolidation. It's also considered consolidation, as it's making lower highs and lower lows. All right, the lower highs are the points at the top, and the lower and the higher lows are the points at the bottom. Are the points at the bottom. So as you can see right here in the chart above, you have lower highs and higher lows. So this is a lower high, this is a lower high, this is a lower high. All the ones at the top and the ones at the bottom are higher lows. This is a higher low, higher low. Price went to before going back to the high. Went to its lowest right here, and then you draw the line and it makes a triangle. So in this chart above, we can see that neither the buyers nor sellers could push the price in the direction. When this happens, we get lower highs and higher lows. Okay, so this is a lower high right here. It's a high, but it's a lower high, and this is a higher low. It's a high, but it's a higher low. So when this happens, we get lower highs and higher lows, and these two slopes get closer and closer to each other. It means that a breakout is near. It means that a breakout is near. When you don't know what direction the breakout will be, we don't know what direction the breakout will be, but we do know that the market will most likely break out eventually. One side of the market will give in. So how can we take advantage of this? Simply, we can place a entry order above the slope of the lower high and below the slope of the higher lows of the symmetric triangle. Since we already know that the price is going to break out, we can just hinge a ride in whichever direction the market moves. So you could put a buy order and a sell order in, and whichever direction price moves is going to hit your buy order or your sell order in whichever direction price moves. So then that's how you can also avoid making mistakes. It's just by putting a buy and a sell order in at the same time. If you don't know what buy and sell orders are, we already went over it. Buy orders are literally you could put a pending order in for a buy and a pending order in for a sell. That's what a buy order and a sell order is. Eventually, price does break out and move to the upside towards the uptrend. So eventually, so we already know that price is going to break out. Excuse me. We can just cinch a ride in whichever direction the market moves. All right. In this example, we place an entry order above the slope, and we place an entry order below the slope. However, the slope of the lower highs, we would have been taking a long ride for a nice rise up. So when price eventually breaks up, it breaks up during the lower highs, not the higher lows. It breaks up towards the lower highs and not towards the higher lows. So when price breaks up towards the lower highs, it takes us on for a nice ride, a nice, couple pips, depending on your position size. That could be a couple $100. Okay, if depending on your position size, it could be a few hundred dollars, just depending on your position size. Which we're gonna, you guys are going to see my position sizes, how I trade eventually. So that just gets down to the definition. So price broke up to the lower highs, and we eventually wind up taking price for a nice ride up. If you had placed another entry or below the slope of the higher lows, then it would have canceled it as soon as the first order was hit. So ascending triangles. An ascending triangle is a type of triangle. This is another type of triangle chart pattern. It's called an ascending triangle. It's a type of triangle chart pattern that occurs when there is a resistance level and a slope of a higher lows. So what happens during this time is that there is a certain level that buyers cannot seem to exceed. However, they are gradually starting to push the price up and eventually making higher lows. So as you can see, price is an uptrend. Price winds up making eventually higher lows. As you can see, it made a higher low right here. And when it made a higher high, then it made a higher low. Then it went back up, made another higher high, then it made another higher low. Basically going back up, making higher highs and higher lows. Higher highs and higher lows is definitely an uptrend. Okay, and then you have lower highs and lower lows during a downtrend. So in this chart pattern, you can see that the buyers are starting to gain strength because they are making higher lows. They keep pushing the pressure on the resistance level. Okay, keep pushing the pressure on the resistance level, and eventually, as a result, it breaks out. A breakout is bound to happen. So now that the question is, which direction will it go? Will the buyers be able to break that level, or will the resistance be too strong? Many charting books will tell you that in most cases, the buyers will win this battle and price will break out past the resistance. However, it has been our experience that this is not always the case. Sometimes the resistance level is too strong and there is simply not enough buying power to push price past the resistance up. So most times the price will in fact go up, and most times, but the point is we are trying to make is that you should not be assessed which direction price will go, but you should be ready for momentum or movement in either direction. So in case we set in an entry order or a pending order for a buy above the resistance line, above the slope of the higher lows, price price could eventually and could fake out, and price could drop almost the same height. It could almost drop instead of pushing to as a continuation towards an uptrend. Price could always do what it wants to do, and price could drop almost the same height as the original uptrend. As you can see to the left, price dropped back down to on the right to the same level of the original uptrend. In this scenario, that can happen. I've seen it happen in the market. In this scenario, the buyers lost their battle, and price proceed to dive. drop. So you can see that the drop was approximately the same distance as the height of the triangle formation. Okay, so if we set our short order below the bottom of the triangle, we could have caught some pips of that die. So it's important to place sometimes a buy order or a pending buy order above and a pending buy sell order below the uh, the triangle, just in case we have a buy and a sell order in both directions. So no matter which direction price goes in, we will still manage to catch some pips once price goes in that direction. In this direction, would have put a sell order, and we would have caught some pips during this nice downtrend when price drops almost the same height as the original uptrend. So as for ascending the triangles, ascending triangles is usually found is found on an uptrend. It's going to make higher lows, and eventually is going to break above the resistance line. It should, but some cases price won't, and it'll be a fake out, like as in this picture is shown, and price will consider to will die back down and shoot back down and make downtrends and make lower highs and lower lows. So descending triangle is the opposite of the ascending triangle. Descending triangle is found during a downtrend. As you probably guessed, descending triangles are the exact opposite of an ascending triangle. We knew you were smart. In the descending triangle chart patterns, there is a string of lower highs that form the upper line. The lower lines is the support level, and the upper lines is the lower highs. And the support level is is the lower lows, which price cannot seem to break. So descending, we want price to shoot back down and continue during the downtrend, during the descending triangle. So it's making lower highs. We have the support right there. It's making lower highs. Make a lower high right there. Made another lower high right there at the top of the resistance, and made lower lows after that. In this chart pattern, you can see that price is gradually making lower highs, which tells us that some sellers are starting to gain some ground against the buyers. Okay. Now, most of the time, we do say most of the time the price will eventually break to the support line, will eventually break down to the support line, and will continue to fall past the support line in most cases. However, in some cases, just like in the example with the ascending triangle, when price was supposed to continue and supposed to push past the resistance line, it didn't. It broke down and towards the support line. However, in some cases, the support line will not be strong enough, or it will be too strong, and price will bounce off of it and make a strong move up. It will be a fake out. The good news is that if we don't care where the price goes, we just don't know that it. And the good news is that we don't care about where the price goes. We just know that it's about to go somewhere. Okay. Remember, the triangles means a big move. It's about to occur during an uptrend or a downtrend. In this case, we would place an entry order above the upper line of the lower highs if it broke above. And in some cases, we will place our order above the lower high line, and we could place one above below the support line. That case, if price does break above the upper line, above the resistance line, then we will get in that case, price will end up breaking above the top. We already placed our buy order above and below. So if whatever direction price decides to go, it's going to hit our entry triggers, our buy pending orders and selling orders. In this case, price ended up breaking above the top of the triangle pattern. After the upside breakout, it proceeds to surge even higher and surge even stronger higher by around the same vertical distance of the original downtrend of the descending line. Placing an entry order above the top of the triangle and going for a target as high as the height of the formation would yield to nice profit. profit. Okay, so alright, gang. So this is another important chart pattern. It's kind of considered familiar to the bullish and bearish pattern. Just explaining a little more in detail of what to expect once these triangle formations do form in the market. Remember, when triangle formations do form in the market, no matter if it's an uptrend or a downtrend, a big move is about to happen after that. So just remember that. Alright, gang. So in the next video, we're going to talk, about more important chart patterns that you're going to see in the market. Alright, so gang, it's your boy Nature, aka Nature Gang.